Assalamualaikum. Hi, my name is Muhammad Ifan Yahya.
Hello, my name is Hafiz Danish.
Assalamualaikum and hi, my name is Nurin Batrisha Azad binti Saadullah.
Assalamualaikum and hi, my name is Saleh Najwa binti Zainuddin.
Hi, my name is Tuan Kaisara binti Tuan Su.
Assalamualaikum and hi, my name is Nurul Ishira binti Huzaimi.
Market players for the instrument. The first one is issuer. Government of Malaysia (GOM) is the primary issuer of the instrument. They issued via Bank Negara Malaysia (BNM) and issued various kinds of securities including bonds, Islamic securities and treasury bills known as government investment issues (GIIS). These instruments serve as avenues for government to raise funds for development expenditure, raising capital from financial market, and attracting participants from various investors and institutions. Its activities in the market have considerable effects on interest rates, liquidity, and the state of financial system of a whole. The second player is investor. This investor consists of institutional investor, retail investor, and foreign investor. Institutional investors can divide into four, which is commercial bank, insurance companies, pension funds, and Islamic finance institutions. For retail investor, they can both participate directly and indirectly by purchasing the instrument through various kind of channels or investing indirectly through mutual funds or unit trusts. Retail investor may access the primary market through auctions and offerings, contributing to the diversity of the investor base, enhancing overall market participation in Malaysia. Lastly, for foreign investors, they participate in secondary market, contribute to market dynamics, influencing pricing, and acting as indicators of global confidence in the Malaysian economy.
Next, commercial and investment bank are also market players for Malaysian government security. Commercial banks are able to mediate transactions between buyers and sellers of government securities with their existence in our country. In addition, it is also the main channel for retail and institutional investors to acquire government security. Commercial banks obtain government security from duly appointed principal dealers and then resell them to the customer. Furthermore, commercial banks also become underwritten. The reason for this is that bigger commercial banks have the ability to take part in the underwriting of government security. For investment bank, it becomes the lead arranger for larger or more complex government security. Insurance investment bank may act as a lead arrangers. This involves structuring deals, advising government on pricing and targeting investors, and managing the book building process to secure sufficient demand.
Next, I will talk about reason behind the instrument issuance for financing development expenditure. The core purpose is the main reason for MJS issuance to raise funds for the government's development project. These projects span infrastructure, education, healthcare, and other crucial areas for economic growth and public well-being. Next, shifting focus. Initially, MJS catered to institutional investors like the employees, provident fund, and banks. However, over time, it becomes a vital source for financing public sector development programs. For managing budget deficit, during periods of economic slowdown or unforeseen circumstances, government revenue might fall short of its planned expenditure and bridging the gap. MJS issuance help to cover this budget deficit without resulting to external borrowing. In some cases, the government might use MJS proceeds to prepare of external debt existing foreign loans, potentially reducing overall debt burden and interest costs. Next, for promoting market development and liquidity, MJS serves as benchmark securities for the Malaysian bond market, establishing a reference point for pricing other fixed income instruments. This promotes market development and improve efficiency. Regular MJS issuance will enhancing liquidity with varied maturities creates a liquid rate secondary market for investor, attracting domestic and foreign participation. For meeting investor demand, Malaysian government securities are considered risk-free due to government's strong credit rating. This makes them attractive to investors seeking safe and stable returns, particularly during periods of market volatility. Diversification options also offering various MJS with different maturities and interest rates allows investors to diversify their portfolios and manage their risk profile more effectively. It is important to note that the specific reason for MGS issuance can vary depending on the current economic and financial climates, government priorities, and market conditions. The Malaysian government regularly publish its debt management strategy outlining its planned issuance.
Okay, let's move on to the next part, which is the benefit of investing in Malaysian government security, MGS. The first benefit is tax exemption, where tax refers to an amount that must be paid by individuals and corporations to the government according to their income. So, MGS investors are immune from withholding tax and they don't have to pay stamp duty when transferring stock. The second benefit is reliable sources of income. Since MGS offers its investor a fixed payment rate, the issued bonds constituted a guaranteed sources of income. The coupon payment will thereafter be given semi-annually, which will help investors who are searching for a reliable sources of income, especially the government, which will use the money for spending on development. An interest payment to the investor each year is referred to as the coupon payment. So for the third one, which is lower risk, Malaysian government securities, MGS, are among the country's safest investment due to their minimal risk. A lower risk signifies that the bond is guaranteed by the government. As a result, default risk, which is the risk that investors would fail to repay principal and interest, is unlikely to occur because they have a strong track record of financial management. So for the next one is high liquidity. Government bonds, often known as MST, have strong liquidity when reselling to new investors. This means that the bond can be easily bought and sold in the secondary market, which is where bonds or securities sold in the primary market are traded. As a result, according to Bank Negara Malaysia (BNM), they always reopen benchmark securities to raise the quantity of outstanding issue in order to promote market liquidity. For the last one is country's development. Malaysian government securities MGS were issued to stimulate the country's development through their funding. The proceeds from the bond issuance were utilized to fund development projects that had a direct social and economic impact. For example, advancement in health and education to ensure societal well-being. Furthermore, it will facilitate and accelerate the country's transition to developed status as well as boost its international standing.
So, I'm gonna talk about the characteristic of the instrument. Upon maturity, investor receive their principal amount at the end of the long term. Investor will purchase long-term government securities with maturities longer than a year, get interest payment in the form of loan repayment. Seldom do government default on their debt on schedule. There are many characteristics of the instrument. So, for the first one, which is no credit risk. Credit risk is the possibility of the borrower being unable to repay the loan along with the interest payment. It is very rare for government to default on their debt. Defaulting on their debt will make borrowing fund in the future difficult and expensive. Even when countries go through major crisis, they will try to avoid default. So let's move on to the second one, which is tradable on the secondary market. Government securities can be bought and sold in the secondary market. Until recently, investing in government securities was restricted to bank and large financial institutions. After the rollout of the retail direct steel scheme, retail investors too can invest in government securities. So, for the third one, which is coupon payment. Interest payment on bond are called coupon payment. The interest is calculated on the face value of the government securities. These payments are calculated based on an annual interest rate and paid at certain interval, which is quarterly, semi-annually, and others. Investment in government securities is lucrative for people planning to have a stable income over a longer maturity in comparison to other options like fixed deposit. But based on the statistic, bond may also offer a better interest rate. So for the last characteristic, which is lower return, Investing in any asset carries some amount of risk. To compensate for the risk, investors are paid a risk premium due to the assumed lack of risk. Government securities typically do not pay a risk premium. Due to the lack of a risk premium, the return on the government securities are lower as compared to corporate bond or other securities. So for Malaysian government securities, they are a long-term bond issued by the government Malaysia for the financing developmental expenditure. They are conventional fixed-rate bond with maturity ranging from 3 to 30 years. They offer a predictable income stream through semi-annual interest payment and considered highly liquid with low risk due to government backing. Bonds are redeemed at open majority.
Okay, there is two types of government securities, which is conventional and Islamic. In conventional, the first one is Bank Negara Monetary Notes (BNMN) that issuance have been lengthened from 1 year to 3 years. Next, we'll go to Malaysian Treasury Bills (MTB) with maturity of 3 months, 6 months, and 1 year. After that, MGS, which is matured, while coupon payments are made semi-annually and continuously issued 3-year, 5-year, 7-year, and 10-year. MGS as benchmark securities as part of its effort. For Hazanah bond, it's issued by Hazanah Nasional Berhad and guaranteed by the government.
The Malaysian government offers a wide range of investment opportunity through its diverse portfolio of securities, with options ranging from short-term bills to long-term bonds. Both conventional and Islamic, there's something for every investor risk, tolerance, and desired income level, while return may be lower compared to risk option. The appeal lies in the safety and stability provided by the government backing. So, research and choose the option that best fits your financial goals and risk appetites. Remember, valuable resources like Bank Negara Malaysia, the Ministry of Finance, and the Security Commission Malaysia are available to help your informed decision making.